Hey guys, so in my today's video, I'm going to talk to you about something different about market sentiment, right? And how it changes. So, if you have normally followed me and seen my videos, I generally talk about the companies, their models, their recent results, and what are they doing for their future growth. But in today's video, I'm going to digress a little bit because I think this is very important topic, which as an investor, we need to understand. And if we understand this, it helps us to take much better decision and understand generally how the market operates. Okay, so first point is market is a forward looking engine and not a backward looking engine. So what do I mean by that, right? So market always look forward how the company will do, and for that they pay the price today. That is the reason why some companies who have made a plan to grow, the stock suddenly rises up because the market is expecting that they're going to do much better than what they are doing today. And for some companies who have done a lot better in the past, but right now the sales have gone down, the market share is decreasing, or the market share has remained stable. For them, there is no movement in the stock, and the market does not reward it. And the reason is why? Because there is no growth in the future. Market doesn't care what has happened in the past. All it cares is what is going to happen in the future. Second thing is market does not like sudden drop in growth without clarity. Okay, so if suddenly there is a drop in the sales growth of a company and then there is no clarity at the back of it, market just hates it. Okay, and even if there is a clarity, and but if that growth is way below what the market is expecting, it's not a good sign for the stock. So I'll take you through two example. Okay, first I will take you through Timex. So Timex declared their result on 3rd Feb 2026, and they showed quite good growth. Okay, if we compare to the in the market, they grew by 26%, and they almost profit got almost double compared to the last year. But even after that, in the next 2 days, the stock went down by 12%. The market just reacted negatively, which is quite surprising, even though the result was quite good, right? So the reason the stock went down is because the company did not hit the expectation, because in the past 3 quarters they were growing at an average of 40%, right? But suddenly out of nowhere, they didn't even grow by around 35 or 37. They just came down to 26%. So market did not like that first. And the second thing, market did not like it because they were not sure whether this drop in sales growth was a one-off or there's any structural problem with the business. And the reason they were not clear is because Timex as a company does not do any con calls. So, and because of that, it just went down. And you know what happened? Management realized that people are panicking, so they decided to hold their first con call ever on 9th of Feb 2026. Okay, so that if people have questions, if people have doubts related to the sales growth or the business growth, so they can clarify it, right? So let's see what happened, right? So on the call, management clarified that the drop in the sales growth was because of seasonality. Compared to the last year, this year, the Diwali season was early by 20 days, so which happened in Q2 instead of Q3. That was one of the main reason for the drop in growth. In terms of business, there is no issue. The company is saying that they have a huge tailwind and they are gaining market share. So management answered all the questions and clarified all the doubts. And then what happened? The stock went back to even higher levels from where it went down before. Why did it happen? Because market got the clarity, and market is like, okay, the future looks good, so we should not punish it. And things went back to normal. I'll give you a second example of PN Gadgil. Result came on 9th of February. Sales was up by 36% and PAT was up by 100%, right? Market just loved the result because it was much better than the last year. And if we take the last 3 quarters, it performed really well compared to the last 3 quarters. And the stock went up by 10%. Okay. And everyone was happy. The market was happy. Then the con call happened. And once the con call happened, the market reacted negatively. So you might be asking, Masood, what happened in the con call that the market reacted so negatively that the stock fell down by 7%? One of the main thing that happened is management reduced their growth guidance to 20% for FY27, and the market did not like it. You might say, Masood, but 20% is a good growth, right? So why didn't the market did not like it? The reason is why, because whenever market compares the growth of a company, they compare it to its peers. So if you take PN Gadgil, their peers in the same sectors are like Kalyan Jewelers and Titan, right? They are much bigger. Like Kalyan has almost 440 plus stores. PN Gadgil has, sorry, Titan has almost more than 1200 stores. Kalyan is growing by 30% and Titan is growing by more than 20%. And PN Gadgil, which is such a small player who has around 80 stores at this point of time and wants to grow at 105 store, and if they are guiding it only 20%, the market did not like it because they are expecting that by if you are such a small player, you should grow at much faster rate, right? Because you have much more market to capture and you have a much smaller base. But that was not the case. And that is the reason why the stock was punished. So am I saying that PN Gadgil is a bad company or the business is bad? No, no, I'm not saying that. It's a good company. It's doing really well. It is expanding its store. But the problem is when we compare the growth of PN Gadgil, which it is guiding, is way lower than its peer, which is Kalyan and Titan. And that is the reason why the stock fell down. And it is at a very low P. And it will remain at this low P unless and until something changes and they increase their guidance. So sometimes, people invest thinking, oh, it's a low P, let me invest it. But one should look at it. Why is it at low P? Is it because the whole market is down, or is it because something they are not doing that great compared to its peer? That is very important, right? So these are the things which I wanted to share with you guys. How does the market reacts to a result and how market reacts when they have a clarity? If the clarity is on the positive side, it's good for the company. But if the clarity is on the negative side, like how PN Gadgil said that they will grow only at 20%, not at the 36% or 30% rate which they're growing right now, it went on the complete opposite side. I hope you like this video and understood how does market sentiment works in general. So please do subscribe to my channel for more such videos. Thank you and God bless you.